There is a new trend in investing that is being used as a weapon against the short sellers and could mean another massive short squeeze coming in the most shorted stocks. In this video, I'll show you the top 20 most shorted stocks, nearly 24 companies short sellers are targeting. Then I'll reveal that new weapon investors are using that could lead to a short squeeze and a massive price return in any of these stocks. We're getting started right now, but first, I've got to send that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now let's look at the top 5 most shorted stocks. Then I'm going to share that list of 20 companies short sellers are targeting and the new way investors are driving that short squeeze. Our 5th most shorted stock here, Reliance Global Group, ticker RELI. Now, Reliance is a typical story you're going to see in most of this short stocks list. New companies listed over the last year at really high valuations that just couldn't maintain that stock price. The insurance brokerage issued shares February of last year around $6 each and saw the stock slide to $2 by December before getting that short squeeze that took them back to that initial price. And they've since sold off a little bit here. So what you need to understand also is you need to check some of these numbers with the stocks when you're seeing this video. A lot of that short interest is going to change here in the next 2 weeks, and the share price can go higher or lower really quickly. Now with Reliance though, more than half the shares available are shorted though, and the number may adjust here over the next week as the short sellers get shaken out from that December squeeze. Next on our list is Cortex, ticker CRTX, and shares of this biotech are down 88% since September, and it really shows what can happen to biotech stocks if they don't get that good news on their pipeline of drugs. And Cortex is a clinical stage biotech focused on therapeutics for Alzheimer's disease and those other degenerative disorders. Like a lot of the biotechs though, the company has no revenue and no earnings until that big breakthrough drug, so these live and die on the news. More than 8 million of these shares of the company are shorted, just under half the shares available. Now, the average daily volume on this is only about 1.5 million, so any good news at all could mean a big short squeeze to unload those 8 million sold by short sellers. Longeveron, ticker LGVN, is the perfect example of what can happen with shares popping 800% in November before coming back down, but still more than 250% up on the news that the FDA, the Food and Drug Administration, is including its lead product. It's a cellular treatment called Lomecel B in the agency's rare pediatric disease program. So this is a biotechnology stock that got good news on that pipeline. Even after that jump in shares though, there are still more than 1.4 million shares shorted here for about 30% of the float. Insignia Systems, ticker ISIG, is another example of what can happen here, with shares jumping 280% in December after just rumors floated on social media of a short squeeze coming. The company provides in-store and digital advertising and has more than 60% of its available shares shorted. That's more than 500,000 shares on a stock with less than 1 million shares available. Now what's driving this short selling is that they're looking at a sales decline of 21% reported last quarter and negative earnings, and just saying that this one isn't worth the share price. Next here is Allbirds Inc., ticker BIRD, and this one went IPO in November and is already down 30%. It's a trendy footwear and apparel retailer trading at 7 times on a price to sales basis. So the shorts are just comparing it against others in the space like Nike with its 6 times price to sales or Skechers with its 1.2 times sales valuation. Now that said, Allbirds is booking 30% annual sales growth versus that 1% for Nike and maybe a little bit closer to maybe 20% for Skechers. So there is the bull case for this company. There are almost 12 million shares shorted here as of last month, with about 47% of the shares available for trading on that average trading of about 3.6 million. So that's more than 3 days that would be needed to cover those shorts. I'll show you that full list of most shorted stocks next, but by short sellers here, we're talking about people borrowing a stock to sell it. These are typically hedge funds or other institutional money managers betting that a share price is going to go down. So they borrow the shares through a broker and then sell them. Now, since they don't actually own those shares, this creates that selling pressure because it dumps more shares on the market. The idea is that if the stock price falls, the short seller can buy the stock back for cheaper to cover those borrowed shares. But what happens in a short squeeze is the price rises and the short seller is facing a big loss. If the price rises fast enough, the short sellers give up and rush in to close their positions by buying the stock back to return those borrowed shares. And with potentially millions of shares now being bought by the shorts, that supercharges the stock price higher. And here's that full list of most targeted stocks by short sellers with that short interest in the right column. A lot of these are going to be those pharmaceutical names, so you really need to be tuned into their pipeline and the clinical trials, but you can also find some solid long-term companies. Now that's how I like to play these short stocks, looking for those long-term investments that are being targeted by the sellers, maybe just for some temporary weakness. If I believe in that long term of the company, that gives me the advantage of patience. Something the short sellers just don't have, and I can wait for them to unload their positions, supporting that price higher. So you've got some great long-term companies here, like Beyond Meat, that while it might be a little pricey, still has a strong future. We talked about EV charging stocks a couple of weeks ago, and I think Blink Charging could prove the shorts wrong over the next year or two. Solar stocks have also been hit hard lately, but Beam is one to watch for the long term. Weber, who didn't have a Weber grill growing up? This one just went IPO late last year and is down 25% into that value territory. Corsair is a super popular gaming stock, and I think Workhorse still has the potential to surprise higher. Now for the cool part though, a new weapon being used by investors against the short sellers and that could make short squeezes even more likely. Lately, retail investors are pulling their shares off broker platforms using direct registration services to take custody of that stock and keep it from being loaned out to the short sellers. You see, when you hold a stock on most investing apps, the broker reserves the right to make those shares available to those short sellers. It increases the numbers of shares available to be borrowed and then shorted. But if you direct register your shares and take them off that platform, they aren't available anymore. That makes it harder to borrow and short a stock, making it more expensive for the short sellers and more likely they get hit with that short squeeze. There are services like ComputerShare Ltd that does this, direct registers your shares and then holds them in your name out of the reach of those lending brokers. You're still holding the shares online, but it's off a broker platform. And again, because those shares are no longer available to borrow and then sell short, it makes a short squeeze all the more likely. For example, if a stock has 1 million shares available on a broker platform and 250,000 of them are borrowed and shorted, then it has a short interest ratio of 25%, which is pretty high. But if investors with 300,000 of those shares take their stock off the platforms, direct register them, then the total available is only 700,000, and that short interest jumps to 35% of the shares available. If the stock price starts rising and short sellers rush to buy back their borrowed shares, it makes it more difficult and forces that short squeeze. Now, to be fair, the big institutional investors like your mutual funds and your pensions, they're going to hold the majority of most stocks and provide most of that stock loan inventory. So direct registration isn't going to matter for a lot of those big stocks with the tens of millions of shares, but it can be a factor in some of those smaller names, and those already most shorted. Click on the video to the right for the 11 cheapest stocks in the market, the cheapest stocks ready to rebound in each sector of the economy. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.